Toronto home sales just dropped 28.5% in 1 month, one of the steepest declines in decades. But here's the real issue. Inventory is skyrocketing, mortgage delinquencies are rising, and majority of sellers are still overpricing their homes. If you don't understand what's happening now, you could be making a big mistake. So is this a buying opportunity or a sign of something worse? And to figure that out, first we'll dive into the latest housing market data. What's really happening with sales, prices, and inventory. Then we'll look at the key factors driving this shift. We're talking about interest rates, buyer confidence, and economic trends. And finally, I'll simplify it all so whether you're a buyer or a homeowner, you'll know exactly what this means for you and what to do next. Real quick, for those who don't know me, my name is Richard. I'm a real estate agent passionate about keeping Canadians informed about what is actually happening in the housing market. So naturally, this channel is all about Canadian real estate. And if you like that, and you want to stay up to date, give this video a like and subscribe to the channel. So let's start with sales activity. February saw a 28.5% month-over-month decline, the largest since 1989. In fact, both single family and condo sales dropped to levels not seen since the 2008 financial crisis. And on the supply side, new listings fell 21.4% from January, but remained 6% higher than last year. Meanwhile, total active listings are the highest it's ever been in February since 2009. With demand collapsing faster than supply, the sales to new listing ratio dropped to just 30%, well below balanced market levels. Historically, anything under 40% signals strong downwards pressure on prices. And speaking of prices, the MLS Home Price Index fell 1.5%, the sharpest decline since late 2023. This aligns with the rising inventory and just declining sales all around. Another sign that the market is tipping further in buyers' territory is the months of inventory, which just hit 4.8. The second highest reading since 2000, outside of the 2008 financial crisis. And now that we have a better understanding of what is actually happening, what is driving this market shift? Toronto's real estate market is in a transition mode, I would say, and multiple economic forces are shaping its trajectory. And that's what I want to talk about next. And one of the biggest factors weighing in on the housing market right now is economic uncertainty. Consumer confidence dropped sharply in February, with the Conference Board's index hitting its third lowest level on record. The biggest concern is inflation, interest rates, and uncertainty around these new tariffs that are just every day they seem like they're changing. Then bond yields have plunged as well, which signals the market is expecting the Bank of Canada to cut rates aggressively. Reducing rates by 25 points last week confirms the start of this. If this continues, mortgage rates could dip into the low threes or even high twos by summer. Lower mortgage rates could provide a much needed boost in buyer confidence, but the question is, will it be enough to offset the broader economic concerns? Next factor driving the market shift is the power of sale listings and mortgage distress. Another important indicator to watch in regards to financial stress in the market. In February, power of sale listings dipped slightly to 274, but it doesn't mean we're out of the woods with where the market is projected to be going. Mortgage delinquencies in the GTA are still rising, as reported by RBC and CIBC, with thousands of homeowners facing renewals at higher rates this year. You can't help but think that more distressed sales are likely to happen on the horizon. With borrowing costs still high and many homeowners renewing their mortgages at much higher rates, we could see an increase of power of sale listings later this year. If mortgage rates don't drop fast enough, we may see further downward pressure on prices. And the next factor I want to briefly talk about is the condo market, which is facing two major challenges right now. First being the demand in today's market is weak. Only 101 new condo units were sold in January, marking the lowest levels in over 2 decades. Second being the potential future shortage supply. I bring this up because if new construction continues to slow down, we may face a housing shortage by 2027 and beyond. But this is a hard one to predict. Right now, it's a tough market for condo sellers, but this slow pre-construction activity could mean far fewer units in the next few years. This would eventually push prices back up, so while buyers have the upper hand today, things could look very different in the next couple of years. And then one final consideration is how much of February's slowdown was due to the brutal winter weather, because it wasn't nothing. Toronto had 12 days with more than a foot of snow on the ground, compared to 0 last year. And historically speaking, when the winter weather is harsher than usual, home sales tend to rebound in March and April as conditions improve. And so the question is, Was February's crash one-off because of the bad weather? And if so, we could see big sales rebound here in March and April. But if the economy continues to slow down, the bounce may be weaker than expected. But more importantly, what does this all mean for you? And if you're a buyer, I'll start with you first. I do see a window of opportunity, but is now the right time? Because right now we have more choices and less competition. Inventory is at its highest level since 2009, meaning more listings, fewer bidding wars, and better negotiating power for you as a buyer. If you've been waiting for the market to cool down, this is the best position buyers have been in for years. And then we can't forget about mortgage rates, which can continue to drop, changing the market as well. As mentioned before, interest rates have and are expected to continue to fall, which could bring more buyers back into the market and drive up demand, which we'll have to wait and see what happens next. If you buy now, you could lock in a deal at today's lower prices and just refinance when rates drop. Definitely an option for you. But what I will say is you need to be selective. Not every home is a great deal. Some areas, especially in the condo market, may still see further price drops. And what I would do is look for motivated sellers. Some homeowners who need to sell fast might be willing to negotiate well below asking price. The bottom line is, right now, you as a buyer have the upper hand. But if interest rates fall, competition could heat up again. And so if you're financially ready, this might be your best chance to get out and just start looking at homes. That way, if the market does change, just not in your favor, you can pull the trigger on something fast. And now I want to talk to you sellers. It's a tougher market out there, but it's not impossible. And one thing I want to stress is overpricing will hurt you. Many sellers are still listing way too high, thinking prices will just bounce back, but buyers aren't rushing in right now. And so if you need to sell, pricing competitively and just standing out from the competition is going to be key. But who knows, spring and summer could bring more demand. If mortgage rates do drop as expected, more buyers could re-enter the market by late spring or summer, boosting demand. And so if you don't need to sell immediately, waiting a few extra months could put you in a stronger position. And then make sure your home stands out. Buyers are being pickier than ever. So homes that show well, that are staged, updated, and priced right are the ones that are selling the fastest. And if you're struggling to get offers, offering incentives like just covering closing costs or just flexible closing dates could help attract buyers. The bottom line is, for you sellers out there, it's not impossible. But it's not like the hot market of the past few years that you've been used to. And so if you need to sell now, be aggressive with pricing. And if you can wait, a stronger market might return in the summer. All that to say is that the real estate market is constantly evolving, and the key to making smart decisions is understanding the data. And so if you found this update helpful, just make sure to hit the like button and subscribe so you don't miss out on next month's report. And if you want to see how this month compares to last month's, where I break down the key trends that are still shaping the market today, I'll link that video right here, and while you go watch that, I'm gonna go fly some drones.